luggage is full of cash that go out to Minneapolis. Why aren't banks like Wells Fargo stepping into the breach? This is a money-making opportunity after all. And they're so big, they could swamp all these. Here in Minnesota, we've been dealing with allegations of fraud in the Somali community, East African community associated with the so-called Feeding Our Future.
Every year, migrant workers send home more money than the entire economy of Belgium produces. Global flows hit an estimated $905 billion in 2024. That's more than all foreign aid and all foreign investments to the developing world combined. My guest today has spent 20 years studying what money builds when it lands. Paul Vaaler, thank you for joining me on IQ Index. Could you start by introducing yourself, what you do, and how you landed into the world of remittance?
Yeah, glad to. First, thank you for having me, and thank you for the opportunity to talk about this really important topic. So, I'm a professor at the University of Minnesota. I have a joint appointment at the Carlson School of Management and the law school. So the combination is international law and business. So my interest in studying remittances and migrant economics goes first to where I do my work. The Carlson School of Management is on the west bank of the Mississippi, and it abuts Cedar Riverside, which historically has been a center for new immigrants, whether they were 150 years ago, my forebears from Norway, or 50 years ago, refugees that were coming from Vietnam and Cambodia, 40 years ago, refugees from Ethiopia coming from a civil war and a famine, or 30-some years ago, Somali refugees, and then more recently Liberian, and there were even some Ukrainian. So Cedar Riverside has always been a place for new Americans and migrants, and I became curious and started to study how they sent money home and what it was being used for. And I learned an incredible amount about it. And I took it upon myself to study it from a business standpoint, because what I learned is that some of that money is going to fund, found, and grow small, often informal, household-based businesses that are making an incredible difference in East Africa and more generally around the developing world.
Walk me through a single transaction when it comes to remittance. So you have someone here in Minneapolis who walks into a Hawala, sends money to somewhere in Somalia, for example, or Kenya. Mm-hmm. How does that work?
Mm-hmm. The short answer is it works differently than it does for people who are usually native-born U.S. So for me, if I wanted to send money to another part of the world, say to my cousins in Norway, I would have a bank account and I would go to the bank, probably Wells Fargo, and I would arrange an interbank transfer that would go from my account to my cousin's account in Telemark. It just doesn't work that way with migrants for a couple of reasons. The most important reason is because many migrants, particularly from East Africa, in the developing world more generally, don't have bank accounts. We call them unbanked. And so the means by which they often send money is through a separate financial institutional system we might collectively call a money transfer company. And there are a couple of big ones that we know. MoneyGram, for example, is one, and Western Union. They've been around forever. And then there are a lot that are specialized to certain remittance corridors. Think of them as the reverse to migration corridors. So there are companies that specialize in East Africa and in particular in Somalia, including several here in town. There's some big ones, multi-billion-dollar companies for it. They are often built historically on principles that we might summarize. They're that term you used, Hawala, which of course in Arabic means both transfer and trust. And so if someone from Cedar Riverside decided to send $200 to their cousin in Somaliland who has a farm and is trying to save up money to buy a truck, say, then the way they might do it is to go to Western Union or MoneyGram, but probably more likely to go to one of these specialized money transfers based on Hawala principles. But with this corridor, they would speak your language. They would have traditions that would be more consistent with what you have. They would expect you to come and eat when you're sending money home for it. Mm-hmm. They would also facilitate what is a very reasonable need, often with migrants, which is speed and transfer. So I can't wait 3-4 days for this to get there. I needed to get there yesterday. And so these are the kind of things. And they would go to that money transfer company that was specialized in it. They would give their $200 plus some small fee, $2, $3, $4, depending on what it was. And then that money would go from the counter or electronically across to their own transfer means, and it would go very quickly from that money transfer company to Somaliland or to some hawaladar counterpart in Somaliland, who would then facilitate the final transfer, often by means of wireless technology and a code. But there'd be in-between places that would be invisible to that person. Mm-hmm. And they only become important for two things. They become important for regulation, and they become important when the hawaladar in Minneapolis and the hawaladar in Somaliland need to settle up. Because at the end of the day, the hawaladar in Minneapolis is receiving a lot of cash or other types of financial instruments that they bank. Meanwhile, the hawaladar in Somaliland is paying this out. So there's an issue that the customer doesn't see, but that's how they do it. And in many ways, it would look a lot like you would if you went to Western Union.
The money is most of the time instant. If you send money from Minneapolis to someone in Kenya, they would get it in like a few hours, compared to like Western Union, which would take 3 to 5 business days. Could you explain it to me how the money moves? Because there's been a lot of stories where there's been like a lot of cash in, in suitcases that has been seen in airports such as MSP. Could you explain to me how the money moves, if it moves at all?
Mm-hmm. It's a great question, and it moves differently depending on the money transfer organization that you go to. So first, let's talk a little bit about MoneyGram, Western Union, the big players, the global players for it that have corridors all over the place. Every money transfer organization is also a foreign currency trading organization. And in part, the transfer creates a brief opportunity to put that money to work when it's going from the sender to the recipient. And in many companies, that's the major source of revenue for them, is in trading. They're very good at trading currencies and overnight markets for it and the like. They also charge a fee, and that's another source. Think of it like a bank, which makes money on interest from taking deposits and making loans, and the difference, but they also have fee-generating income, right? They'll help you get a mortgage, and they'll charge you a fee for that, or they'll sell you insurance. So these money transfer organizations do that. The longer they can have the money before they deliver it, the longer that they can use it in those currency markets. In some of the specialized corridors where there's very impatient customers for it, there's just less of an opportunity to do that, but it doesn't mean that it's not there. And then there are other things that happen in the hawaladar system where you can add value to the transaction. So for example, in some countries, not necessarily East Africa, but in some countries, the Philippines, the money transfer company might take your cash and send the cash, but they also might take the cash and send it as coupons to a local grocery store. And they can turn that into more money because they know the recipient is going to buy food with that. Everyone's going to make money on that. The customer is going to get a little bit more than $200 sent because it'll be a discount that they'll get at the grocery store. The recipient will be able to go to that local store in Manila and buy all sorts of goods with essentially scrip, with a coupon. And there'll be a little payment to the hawaladar arrange this. And the store will do it because it means more customers. So that's another way that even without a long float of 3 or 4 days, money transfer companies can make money in addition to the fees they charge.
You talked about the Hawala system having sort of like it's a trust-based business, between someone who was a Hawala here and someone who was a Hawala in, let's say, East Africa. How is that different from, like formal banking? And is that a factor that has helped these Hawalas to exist for so many years?
Well, financial transfer, going back hundreds of years, has always been based in part on trust. Whether the trust was between a family named Rothschild, or it was a trust based on a clan, an extended family relationship in many Muslim-majority countries of North Africa. The Maghrebi traders who would transfer goods and money across the great trade routes of North Africa were arrangements and traders that were all trusting to one another. There's nothing written down. They were part of an extended family and community. And if anyone ever reneged or cheated, they were out for good and their family was out for good. So shunning was the ultimate. Here, the hawaladar are often connected to each other by extended family, ethnicity, common language or culture, or common community. They both came from the same village. They drew water from the same well. And so they understand one another. And there's both social knowledge about what they do and who their customers are, and there's a sense of trust, of reciprocity. And in here, it's incredibly important because in a way, it's no different than 1,500 years ago when those Maghreb traders and others were doing their work in North Africa. Very often, both in the transfer of the money and in the settling up between the hawaladar, between these agents, it requires a degree of trust and reciprocity that takes time. So you mentioned early, Ikra, talk about luggages full of cash that go out to Minneapolis Airport.
Does that happen, or is just
Absolutely, it does. And it's all in the up and up. This is part of the settling up. So remember I mentioned how through many transactions, the hawaladar agent in Minneapolis is receiving a lot of cash, and his or her counterpart in Somaliland is paying out a lot of cash. They need to settle up so they can continue doing business. So how does that happen? This is where I think even more than the sending, the settling up transaction between them is a reflection of history of trust and of transfer. So what might happen is the operation here in Minneapolis has got a lot of cash. A lot of people work in cash because people don't have bank accounts. They would put that cash in a suitcase and they would give it to a courier, and that courier would go out to the airport, and that courier, before they got on the plane, would declare that to the proper officials. And
that's all legal?
It's all legal. It's just you have to, over a certain amount, you have to declare what it is and what it's for, and there are ways to verify that over time, and their agents are well known to people. So it happens all the time. So if you're on a Delta flight and you see someone it looks like they're lining up with certain things they want to keep themselves, that's why. That flight isn't going directly to Somaliland. There's nowhere to go. But it very often will go to places like Amsterdam or Paris, and then from there we'll transfer on to Dubai, which is one of the important financial centers and, relatively speaking, liberalized, open financial centers in the Middle East. There's some more magic. So if that courier comes in with cash, maybe it's just to get on another plane that flies into Mogadishu and go to Somaliland. But other interesting, really innovative things happen. So it might be that they go to Dubai, work with another hawaladar, changes this, and then that hawaladar may arrange to export to Mogadishu or to wherever the hawaladar is located, goods that they can sell and turn into cash. Used bicycles, clothing, shoes are a really popular thing to have. Mm-hmm. That goes with it. Mm-hmm. Building materials, whatever might be on the ship that's heading out there, you buy into it. And so at the end of the day, the hawaladar agent in Somalia is not just a money transfer agent. They're kind of a factorer. They're a wholesaler, or they may be a business person themselves selling goods. And that's how they replenish. Now, things change. Within many East African countries, there's a very well-developed digital wireless transfer means for it. But at the end of the day, the international aspects often have certain things that look to us pretty primitive. Mm-hmm. And they go back hundreds of years, and they're built on trust. And the trust, when it's violated once, and it goes out. So in this world, there aren't written contracts. And that makes it difficult for us to see in the settling up. It makes it difficult to understand how it could happen, because where I live, where we live in the U.S., we're a legalistic culture. We do a lot of contracting. Other places, that doesn't happen.
Yeah, I want us to, we'll get back to that point, but I want us to sort of like talk about Hawala in general. And I know there's a backstory to why there's been a lot of like regulations when it comes to Hawala. Mm-hmm. And Hawala fills a gap because something has to create the gap. Could you talk to me about why did the formal banking system abandon this corridor?
Mm-hmm. It's a great question. So why aren't banks like Wells Fargo stepping into the breach? This is a money-making opportunity after all. And they're so big, they could swamp all these little, relatively speaking, little companies. I say little because maybe there are only a couple of $1 billion in revenues every year. In part, it begins with the point I made earlier, which is either one or both customers at either end probably don't have a bank account. They probably don't have a bank account because in the recipient end, there's no banking system. So if I go to Somaliland and I ask the percentage of individuals who have bank accounts, it's probably very, very low. They would have alternative ways that they store money, often through telecommunications companies and the digital
banking.
and money. Yeah, it's a kind of quasi-banking, but they wouldn't be informal banks. That matters if the sending institution is a U.S.-based institution. The company, the bank, and more importantly, their regulators, often federal regulators, want to know where money flows internationally at each and every step. They want to be able to verify it. And in part, after 2001 and our concerns about terrorism that came out of groups out of the Middle East, and the perception that they come out of areas from East Africa and the like, there are concerns about that. There are also related concerns about money laundering, that there may be illicit activities in the U.S. for which the funds are then transferred internationally. These are fair reasons. Maybe they're based on part on folklore and some prejudice, but they're fair reasons for the federal government to exercise regulation.
And it's hard to follow the money in this case.
They want to understand it. In fact, the latest regulatory reforms call for international money transfers where each institution sending the money on is able to tell the regulator who got it and where they're going to send it.
Is that feasible?
Absolutely, it is in a formal banking system. And that's one of the things we're really good at. It gets really hard when we have the kind of settling up transaction I just described to you. It's really difficult to tell a regulator, I'm sending a courier with 50,000 US dollars, and they're going to fly into Dubai, and they're going to turn that money into shoes, and they're going to put it on a boat, and it's going to go to a hawaladar who in Somaliland is going to sell that and replenish their funds. That does not look at all like a clean banking transaction. And so this kind of understanding where the money goes on is so difficult for regulators. And regulators who follow the book and have a different culture may very well decide that this deviation from the norm is a sign of illicit activity, of criminal activity, of activity that could lead and fund the wrong people for things in the United States, or be the fruits of things that were wrongfully acquired in the United States.
So is that based on assumption, or what is it based
It's
on?
based very little on fact and a lot on, an instance such as 9/11, which is a trauma. It's kind of it's a scare to individuals for it, a never again notion for it. Here in Minnesota, we've been dealing with allegations of fraud in the Somali community, East African community associated with the so-called Feeding Our Future thing. And there have been individuals who have wrongfully taken federal money for it and then have sent it abroad in what we would say a money laundering transaction. And what happens is the courts are pretty darn good and the prosecutors are pretty darn good at finding the bad guys and putting them in jail, holding them to account. Money that goes around the world inevitably goes to places and for purposes that we would prefer they not go to. Whether it's money going to Somalia or Kenya, or it's money going to Italy. I can assure you that some investment in Italy goes to the mafia. But the answer isn't cut off trade and investment with Italy. The answer is get the mafioso. And the same thing here. It's based on some fact, but more on stereotypes and prejudice. And it's a mutually detrimental thing. It's obviously detrimental to migrant communities that are doing great things both in the host country and back home to rebuild their communities through this. It's also a lost opportunity for the host country, the United States, because especially in a world where the United States has drastically cut back on foreign aid, in fact, gutted our foreign aid agency for it. This is foreign aid by other means, and it's the best foreign aid because it doesn't involve government. It's people to people, sending money back, rebuilding households and communities with small businesses, educating, giving health to it. This is precisely what aid organizations and foreign aid is supposed to do. And the great thing about it is the real policy for governments is just let them and let it happen. So it's a loss for host countries like the United States and their foreign policy.
You touched on fraud allegations here in Minnesota, and you've been inside a Minnesota federal courtroom testifying about how this system works, and you also work with World Bank, and you've had conversations about how to strengthen the system. You know, both of them are sort of like same systems. I'm just wondering, how do you hold both of those rooms in your head?
Yeah. Well, it begins with the fact that I'm an academic, and so my first audience are other academics. It's to try to study a phenomenon and understand how it matters for the debates going on in my circles. My two circles are business and law. And the way I talk about this for my business colleagues is I talk about this as transnational entrepreneurship, really important entrepreneurship of its own sake, but also for what it does for development. I talk about for my legal colleagues to understand how business, especially international business, really distant financial transactions can go and happen without formal regulation. It's the informal economy at work. And so it's to understand how things work when there aren't lawyers. And that's important because there's so much of the world which is based on the informal economy. And as it formalizes and rule of law takes hold in countries, this is actually the way it begins. If you make an investor, even without a rule of law or contract, eventually they get interested in having those things.
Yeah.
And so this is a way to understand that transition. But back to your point about how you communicate that, I just came back 2 weeks ago. I was at the UN in New York, talking to middle-income countries that are, they're somewhere around $5,000 to $10,000 per capita. The remittances are incredibly important to them. The Philippines would be an example of that. And I was talking about them, how we fund sustainable development. And those countries are trying to find capital for development purposes. This is capital. In fact, it's happening right now in a micro. And there are opportunities through remittances to get migrant communities abroad to help fund it in big ways. For example, through a diaspora bond. So the country of the Philippines could issue a bond to diasporians, and they would invest in it with the expectation of return. But what it does is it provides development capital for the government. This is a great example where you can harness the diaspora and the remittance phenomenon in ways that they get a chunk of that. You said $900 billion in 2024-25, of which about $700 billion is going to non-OECD countries, developing countries. This is a way to harness the diaspora in ways that are directly helpful to governments. This is why I get a chance to talk about this academically, but then to different constituencies, including international organizations like the World Bank and the UN, but also to courts, where these transactions are scrutinized with a perspective of native-born U.S. people like me, fourth-generation migrants from another country, from Norway. And we don't necessarily have an understanding of why the transaction is structured that way, and we make some of the wrong assumptions. So I try to educate court officials, judges, juries, if I can, the prosecutors, and the like, about how to think about these transactions differently. And to make sure that we understand their world when we're accusing those people of doing something illegal.
We talked about $900 billion, remittances that has around the world. Could you talk about the opportunity that it presents when it comes to economic development and how that could be used?
Yeah, so there are really two things. One is the micro opportunity of just leaving the remittance system to the way it largely is around the world, which is relatively light touch regulation, because we know that individuals find the right individuals, often by common community or clan, for the kind of things that they need in their household. They know their household. They came from that household. They have a foot in that household and in the host country, or in their community. They know who the village chief is, the village mayor, and what they need in terms of public infrastructure. And so this happens by just letting it happen on the micro level. And that's one of the best things about my policy prescription, because it just means, like you would say, sometimes let them do it, deregulate it. But there's also more organized development opportunities. I mentioned the diaspora bond opportunity. This is a chance for finance ministries to raise really scarce capital for important infrastructure projects, often in the same rural areas where those remittances go. You can dig a latrine, you can set up a solar panel, but sometimes you really need a big hydroelectric dam. A diaspora bond is one way for remittances to play that role. Another innovative way that I've seen it work in certain East African countries is where remittances are used as security for banks in the home countries that will then lend to these rural communities. So when a bank is sure that there's a steady remittance flow of money going to a particular community, and thus that's cash to pay back a loan, they are more willing to provide village-based or household-based lending domestically because it's like security. This is another great opportunity for local financial institutions in developing countries to kind of get a leg up, to grow, and to find these new customers and constituencies because of what we provide them here in host countries.
Yeah, you make a case for Hawala system and how it can run and sort of like help with, you know, economic development. What are some of the guardrails and regulations that you would suggest that are or should be put in place to make it strong?
Mm-hmm. I think the goal for us ought to be let the system work with a light touch regulation that does an adequate job of understanding the process and certifying that the process takes place as planned. And that doesn't mean every transaction is scrutinized, but it does mean that there's periodic review of what happens and periodic surveillance of the transactional elements. Right now, with money transfer organizations that are based on Hawala principles, there is a regulatory system at the federal level and at the state level in Minnesota and certain other states. But Minnesota, because of its large East African population and populations that come from other countries that are, relatively speaking, unbanked, that they've stepped in to provide their own separate scrutiny and certification to essentially anticipate the kind of questions that would come otherwise from federal regulators. So I think we mentioned earlier two regulatory principles that the federal government is very interested in. One is stopping money laundering. Two is stopping terrorism funding. And there have been instances, very few, but there have been instances that are enough to create this concern, this scare. And so there's a regulatory system in place. That system is upgraded from a regulation standpoint. Every administration or with every new technological advance, I just talked a little bit about the latest that affects more the banking system than the Hawala unbanked but financial system. But the state has been more recently, and states like Minnesota, I think, have done a great job about trying to reveal the mystery to those who are willing to look. If you're a prosecutor and you don't want to look, you just want to treat this the way you would say it should be, like it is with a transaction at Bremer Bank, well, you know, I can't help you. You know, I can take a horse to water, but I can't make them drink it. But I think that's the role of states and local communities is to make this process more familiar to individuals, to understand how it works and why there are these deviations from the kind of things that we wouldn't do. And there are lots of instances of that in the United States, which is a multicultural. There are lots of things that we do differently in Minnesota that nobody else. Heck, I don't know how many people in Texas where people live, eat lefse, but it's great stuff if you're a good Norwegian American in Minnesota.
Yeah.
So there are lots of things we do differently. That's the beauty of this country. And we can accommodate this in ways that are reflective of the institutions in both the home and host country. That's our challenge.
Yeah.
Understand it and then regulate it properly.
There's a lot of people who completely, they do not understand how the Hawala system works, and I think that's why we're having this conversation in the first place. Could you talk to me, how does compliance actually look like in Minneapolis right now? If I walked down to a Hawala center right now, how does that look like?
Well, just in brief, what would happen in terms of regulatory compliance is that means filings. And there would be regular filings with transactions over a certain amount. There would be regular filings every quarter. There would be regular filings on an annual basis for it. And then there would be filings that would be particular to transactions, like when the courier goes to the airport and you got to tell customs officials what you're doing with this money, right? And you reveal it to them, and they do. And they know the forms you fill out, and they can point you at the forms to fill them out yourself for it. The people who do that a lot, so they understand and they're trusted individuals. There's even a program for trusted hawaladar agents, and that's at the state level predominantly. It's there to certify that they follow the right kinds of good banking, or I should say good money transfer practices within that tradition, and provide the books for review, for periodic review, sometimes an unscheduled review. for it. So in many ways, that's what's here. The idea is to make the system credible, and the system is credible, is transparent. That's, I think, getting to your point of making the system stronger.
Yeah. Beginning of the year, there was a 1% interest hike when it comes to Hawala and like money transfer. And then that was part of the president's big, beautiful bill. Could you explain to me how that has played out and what's going to happen sort of like in the next 2 years, 3 years from now?
So the legislation from last year that we call collectively the One Big Beautiful Bill, I'll leave that to you, decide whether it's beautiful or not, included a 1% tax on remittance transactions from non-bank institutions, meaning if it comes from a bank account at Wells Fargo, it's not necessarily subject to that tax. But if it's a transaction that goes through a non-bank money transfer organization, such as many of the corridors that serve East Africa, then it is subject to that. And like any tax, it decreases the transactions because it makes them more costly with it. What appears to have happened, and this is just preliminary evidence because we've only had this tax in place, a number of months, right?
Yep.
And so individuals is that since it's going to non-bank institutions, it's going to individuals who are unbanked, and those are often black and brown migrant communities. And so to some extent, if it isn't explicitly discriminatory, it has that effect. But migrants have always been resourceful individuals. That's what got them here. That's what got them to be successful and to build communities and to take places of leadership in our communities and make America better. And they're no different here. They're innovative at avoiding it. So what the latest reports or these preliminary understandings is that the tax revenue is much less than was expected because transactions that would have gone formally through the money transfer organizations are instead going underground and often going through crypto markets. So, taking dollars and turning them into coins, quote unquote coins, or other forms of script that move informally and largely unregistered or untraceable to counterparties, then eventually converted to cash digitally or in person abroad. This is particularly more of a phenomenon in Central America than it is elsewhere because most migrants in the United States come from certain Central American countries, Mexico, for example. But it's got to be relevant to other places, including East African organizations. So a great question to ask some of our neighbors who run money transfer organizations serving those corridors is, how's business?
Is that less revenue for the government?
It's a lot less revenue for the government, and it's something that's predictable. Every time a country, whether it's a host country like the United States or a state within a host country, Oklahoma did it many years ago, put a tax on transactions where the individual could not provide a passport or some other explicit information that they were here legally. They don't work because migrants are really resourceful, because migrants will find other means, and they're often through informal means, legitimate formal means. I mean, after all, the president's family is a big investor in the cryptocurrency business. Why shouldn't migrants be just as entrepreneurial? And so we see that. And I think this is a reason why taxation or regulation, when it's done with good intentions, that is for oversight and for the kind of revenue that should come if this is transactions and money transactions that are lost, it's why they tend to go wrong. But when they're done for purposes of discrimination or they're for purposes of punishment, or for purposes of that I think are not grounded well in economics. And I think this tax is not grounded that way. I mean, it's explicitly aimed at unbanked individuals, which means black and brown individuals. It has perverse outcomes, and it just doesn't work. So get rid of it. Do the things we should do. Make things transparent. Certify individuals who are doing the right things. Get the bad guys when they're not doing the right thing, and let them happen. And free markets work best when they're free and they're not taxed and they're lightly regulated. And that's what I think we should be doing with this really important industry that not just helps families and individuals, but it helps countries in the places that need it most.
Yeah, just to wrap up, what is the one thing that you think has been greatly misunderstood about the Hawala system itself?
So one of the things I think is so interesting about the Hawala system is its persistence. It goes back to Muslim majority countries countless centuries ago. As I said, North African traders from the year 1000, right? So it's been around forever with it. And it's interesting to see how technology has changed and how the world has become so much smaller. We can reach so many more places so quickly, communication and transfer-wise. But these basic principles of trust and transfer and of settling, even though they involve different technologies, transcontinental jet airplanes and digital phones, they still rely fundamentally on the same trust relationships. And those trust relationships are so important. The people relationships, especially in these parts of the world, that are so important to get capital to for households, so those households can strengthen, so they can have the same opportunities to develop that we've had here in Western Europe and in North America. And I think this is how this happens. So it's their persistence, their ability to adapt to technology.
Yeah, thank you so much.
It's been my pleasure.
Is
Thank
there
you.
anything you want to add?
No, it's really a pleasure to be here and to have a chance to tell the story to a community that I think has a background and understands this. I may be, singing to the choir, as they say. But it's also important because other individuals who access these kinds of broadcasts don't come from that tradition. And it's a way to help educate everyone about this really important phenomenon that I think is so mutually beneficial both to the United States and to the various countries where our great migrants have hailed.
Oh, thank you so much.
My pleasure.
Yeah.